in a few more lectures. But now, it's time for us to move ahead with the other topics as well in the live session. So that's what we'll do. Kapish is saying, "Good afternoon, sir. I haven't attended past one lecture live." That's okay. I mean, that's okay. If you can complete your backlog later on, that's all right. Uh, but today, we have a couple of seniors here who wish to have a word with you to give you the right direction, to give you the right perspective about the place you are at and what is actually happening here, what your students or what your seniors are up to. So let's hear from them. We have Nitin here. So, Nitin, can you please unmute, introduce yourself, and talk about what you want to? Sure. I'll ask Rahul. I hope he's here. Rahul, can you unmute? I don't think he has joined yet. Yes, Nitin, please go ahead and unmute.
Yes, sir. I'm audible.
Yes, you're audible.
Yes, sir. मैं एक्चुअली 243 बैच का स्टूडेंट हूँ और मैंने ज्वाइन किया था सर का एकेडमी इन सितंबर 2024। उससे पहले मैंने 2 कोर्स किए हुए थे एंड आई वाज इन मार्केट फ्रॉम 2021। बट मुझे एक्चुअली इससे पहले मेरा क्या पर्सपेक्टिव था बिफोर एकेडमी एंड आफ्टर एकेडमी, क्या चेंजेस है वो मुझे शेयर करना है मेनली। सो बिफोर एकेडमी जब मैंने 2 कोर्सेज किए थे और उससे पहले भी जब विदाउट कोर्सेज भी मैंने ट्रेड किया, आई वाज नॉट एबल कि समझ नहीं आ रहा था कि क्यों कोई स्टॉक या कोई भी इंडेक्स मूव हो रहा है, क्यों हो रहा है, किस वजह से हो रहा है, और अगर वो नीचे जा रहा है तो क्यों, क्या रीजन है उसका। एंड जैसे बहुत सारा नॉइज था मेरे अराउंड, लाइक कोविड है या सेकंड वेव है, वॉर है, तो ऐसे सारे कोई भी फैक्टर होते तो वो बहुत फियर और फोमो क्रिएट करता था कि ट्रेड लेना चाहिए, नहीं लेना चाहिए, इनिशिएट करना चाहिए, नहीं करना चाहिए, कितनी पोजीशन साइज रखनी चाहिए। ये सारी चीजें मैं बहुत फेस कर रहा था, लेकिन जो कोर्सेज मैंने किए उससे मुझे उस चीज का आंसर नहीं मिला कि क्या उसका रीजन है और क्या करना चाहिए। सो जब मैं यूट्यूब पर मार्क विनरबरी का वीडियो एक सर्च कर रहा था तब मुझे सर का चैनल मिला और मैंने पूरा सर का चैनल एक्सप्लोर किया फॉर अराउंड 1 वीक और वहीं मुझे समझ आया कि मुझे यही चाहिए था जो मैं ढूंढ रहा था। एंड इमीडिएटली मैंने सर को मैसेज किया एंड आई ज्वाइन इन बैच 243 एंड आई थिंक वो 15 दिन जा चुके थे ऑलरेडी। बट पहले मैंने कैचअप कर लिया, फिर 2-3 मंथ्स या 4 मंथ्स के बाद मैं थोड़ा पीछे हो गया बिकॉज ऑफ माई वर्क। बट आफ्टर दैट मैंने फिर रिपीटेशन किया और फिर से सर के साथ कैचअप कर लिया। बट मेरा पर्सपेक्टिव उसके बाद काफी चेंज हो गया रिलेटेड टू मार्केट। पहले मैं जो समझ नहीं पा रहा था, जो स्टॉक्स मैंने ट्रेड किए, मैंने सारे स्टॉक्स एनालाइज किए, क्या मैंने गलती की वो समझ आ रहा था। सबसे पहले जो लेक्चर्स रखे थे इनिशियली वो मैंने रिपीट इतनी बार किए कि मैं बता नहीं सकता हूँ, क्योंकि मुझे ऐसा लगता है कि अगर आप लोगों को शायद ऐसा लग रहा हो कि वो लेक्चर्स इतने इंपॉर्टेंट नहीं है, पर बेसिकली वही लेक्चर सबसे ज्यादा इंपॉर्टेंट है, बाकी लेक्चर सिर्फ फिनिशिंग है। जो इनिशियल पर्सपेक्टिव लेक्चर है, डीएनए लेक्चर है, अगर वो आपका क्लियर होगा तो मुझे लगता है आपके लिए बाकी सब बहुत इजी हो जाएगा जज करना कि मुझे क्या करना है और क्या नहीं करना है। अब मेरे आसपास ना कोई नॉइज है, ना मैं कोई सोशल मीडिया पे एक्टिव हूँ, ना मैं कुछ न्यूज फॉलो करता हूँ। बस मैं जो सर ने सिखाया हुआ है चार्ट पे जो हो रहा है मैं बस वही फॉलो करता हूँ। और ये चेंज मुझे नहीं पता था कि मैं कभी 1 मिनट पर भी ट्रेड ले पाऊंगा, जो मैंने अभी रिसेंटली ली। मैंने बीच में 2-3 मंथ्स कोई ट्रेड नहीं लिया, और जब मैंने ज्वाइन किया तो मैंने वापस से लेक्चर 1 से लेके लाइव सेशन 1 से लेके पूरा दिवाली वेकेशन में मैंने पूरा वही रिपीट किया, और उसके बाद मैंने ट्रेड भी काफी अच्छे लिए हैं। तो मैं एज अ सीनियर, मुझे लगता है कि आप लोगों को उस लेक्चर्स पे बहुत फोकसली और डेडिकेटली काम करना चाहिए। मेरी वाइफ भी आप ही के बैच में है, शी इज फेडरिका, एंड मैं देखता हूँ, हम दोनों होते हैं घर में लेकिन हम डिस्कस नहीं करते रिलेटेड, क्योंकि दोनों के पर्सपेक्टिव अलग हो सकते हैं। सो एज अ स्टूडेंट मैं आपको बोलूंगा कि जो सर बोल रहे हैं वो आप अप्लाई कीजिए, आपको उसके रिजल्ट 100% मिलेंगे। वो जैसा आपको बोल रहे हैं कि आप मेडिटेट कीजिए, किसी टॉपिक रिलेटेड कोई क्वेश्चन है उसको आप सोचिए कि क्यों ऐसा हो रहा है। आपको अभी आंसर शायद ना मिले, शायद 7 लेक्चर 8 लेक्चर 10 लेक्चर बाद आपको उसका आंसर मिले, लेकिन वो जब आपने खुद ढूंढा हुआ होगा तो आपको बहुत याद रहेगा। जैसे मुझे याद है एक डीएनए चेंज का हमारे लेक्चर में एक डिस्कशन हुआ था, और वो 2-3 दिन तक मेरे माइंड में वो चीज चल रही थी कि क्यों ऐसा हो रहा है, क्यों ऐसा हो रहा है। और जब मैंने अपने एनालिसिस डाला, सर ने वो रिव्यू करके ओके किया, तो वो चीज मेरे माइंड में अभी तक है, क्योंकि वो मैंने खुद उस पर वर्क किया हुआ था। सो मेरा यही सजेशन है कि आप कोई भी क्वेश्चन है तो ग्रुप में पूछने से पहले या सर से पूछने से पहले कुछ टाइम उसके साथ स्पेंड कीजिए कि क्यों ऐसा हो रहा है, क्यों कोई चार्ट ऐसे मूव कर रहा है, क्यों इसमें ऐसा मूव आ रहा है। आपको शायद आंसर मिल जाए, मे बी 2 लेक्चर बाद, 10 लेक्चर बाद, 15 लेक्चर बाद, लेकिन वो जो मिलेगा उससे आपको बेटर अंडरस्टैंडिंग है उस चीज की। बस सर, बाकी यही कहना था मुझे।
Thank you so much, Nitin, for explaining everything, uh, giving the right direction and perspective to your juniors. Because, see, Nitin was exactly where a lot of you are right now, right? That's how he also probably figured out through some video of mine. Probably a lot of you have landed up here in the similar fashion. And I'll simply translate in brief what Nitin mentioned for those who are not able to understand. Previously, he has done courses. Again, a lot of you will be able to relate. But the point is, he was never able to get the clarity of, well, why the market is doing what is it is doing, the way it is doing. And there was always external chatter about, COVID is happening, second wave, first wave, war, this and that, right? Kind of noise. So it was usually driven from externalities, and that leads to anxiety, right? Should I trade? Should I not trade? What should I do? When should I do it? By the time I feel confident, everything's just gone, right? And somehow, searching about some particular video, he landed up here. Things are much better now. He's able to even trade on a time frame like 1 minute, which is probably something he never even thought about exploring. And he gave a lot of emphasis to revision, revisiting the live sessions, the lectures, the post. And he's also saying to you that literally every single lecture is extremely important, right? There is not a sequence of beginner to advance in lectures. That's not the way. In fact, the lecture that you might think is lecture 1 or 2 or 3, and there's something else which will be much grander or bigger about to come in the other lectures. That's not the case. In fact, the lecture you think it's pretty simple and obvious, there's nothing much to it, might be the lecture that makes it for you, right? So have the right perspective, and he also has his wife here, Federica is here, and although they live in the same house, obviously they still do not discuss the trading between them, right? They might discuss the concepts, but not about trading, because then if you actually discuss your trades with any person, doesn't matter, is your wife, your son, whoever that is, if you discuss, then that trade is not yours, right? That is coming through noise and probably external validation, and that's the last thing you want to do in the markets. So don't do that. That's what Nitin has mentioned. He's doing really great in trading. He was not able to trade for a few months. He was caught up with some work, but now he's back and feeling much better and taking certainly much better trades. All right. We have Rahul. I think he has finally joined. So, Rahul, can you unmute and give your introduction and give your talk as well?
Yeah, good afternoon, sir.
Hello, how are you?
Yeah, I'm good, sir. I'm audible?
You're audible.
Yeah. To all the students of batch 252, uh, I'm Rahul here, a student just like you from batch 251, and sir asked me to share my experience in the academy. So I'm here to do that, to give a brief idea about the right approach towards the academy. So I heard Nitin speak just now, so he's my senior, so I cannot speak about my performance because we have just started trading just 1.5 2 months back. What I can share is how you can go about the academy and through the lectures as the academy progresses. So my first introduction to Rich Road was in the second half of 2024 when I was going through a YouTube lecture about Mark Minervini's concepts. So that lecture is pretty famous now. I'd already read the book and watched multiple YouTube videos about people talking about Minervini's concept. But yet this lecture blew my mind because the depth of knowledge and the clarity of thought with which sir was explaining the concept, it was evident to me that while watching the lecture that this is something different. So naturally my curiosity grew and I through the next few months I literally binged through the search channel. And then sometime late in December 2024, I reached out to sir and asked him about the procedure to join the academy. So fortunately, the batch 251 was about to start, and I joined in April 2025, just 7 months back. So I'm in the market since 2020, and I come from a fundamental analysis background. I have read many books about fundamental analysis. I it's my passion to study, analyze the companies from fundamental point of view. That Warren Buffett and everything that like that. And I had a bias towards technical analysis because all my knowledge was from fundamental analysis perspective, and there used to be a lot of discussions that online also with my friends also, fundamental versus technical. Our technical analysis is bad is just some punting or like that. So that slight bias was there earlier in my mind, but it always intrigued me because markets is nothing but a price action. I was aware of that, but I one day I decided why not just try to study about technical analysis. So I just decided to start somewhere. So at that time, Mark Minervini's book was very famous, so I just started reading that, and I finished it. And then that intrigued me, and that's how I got into technical analysis. And because of that book only, I got to reach Rich Road because through that because of Sir's video lecture 14, which is public, that was my first introduction to Rich Road. So I just decided to keep an open mind and just explore what technology is all about. So that's how I got to Rich Road, and uh, I had not done any technical analysis courses before. This is my first course, if you like to say that, and I'm very lucky that this is my first and last course which I'll be joining. And after joining that academy, I have to share that all my biases are gone. I know that there is nothing right and nothing wrong. It's about your perspective that matters the most. That matters the most. I was under impression that it is next to impossible to time the markets, and now I realized how wrong was I. No, uh, how to go about the academy? I have to tell you that first thing you have to do is Trust sir completely. Follow him religiously, for the lack of better word. Whatever he tells you, just do it. Sir works on our improvement during the course of the academy more than we do. You will realize it as you go through the uh, academy. So it's our duty to respect his efforts and do one thing that he expects us to do, and that is to practice mindfully. So in my mentorship query email, I had said to sir that I have binged through all his videos on Rich Road YouTube channel. That was my first mistake. These are not videos; these are lectures, and you should treat them with that sanctity. And to all of you here, be grateful that you are here, and have gratitude. Keep an open mind, and just absorb the knowledge and wisdom that you are going to receive in the academy. Yeah, thank you, sir.
Thank you so much, Rahul, for sharing your experience and the perspective you have about the academy. I hope the juniors realize it. Uh, why this? Because a lot of people actually realize this late, and then usually they come, can we start again? You know, at times to me it feels like, well, you could have just done it when you joined and could have saved a lot of time and energy. But okay, that's not something I want to happen with you. That's okay. And there'll be more seniors coming regularly in your live sessions. They might help you more, right? But great. Thank you, Nitin and Rahul, so much. Now let's start with the agenda for this live session. We have done DNA, we have done perspective, and we have done DAO theory as well, along with some Wyckoff, right? Okay, so we have covered actually a lot of ground since the DAO is open. So today we'll do some work in that area. And maybe in few live sessions, we will have a quiz kind of live session about the DNA. Not right now, because right now you all know what DNA is, okay? If I ask you questions, I'm pretty sure most of you will be able to answer flawlessly. But we'll do it a bit later when it has taken a backseat. Then it'll make it clear who actually understands it on a deeper level. Also, there was an interesting discussion by Ankit, Federica, and a few more about what exactly DNA is. So the point is, you have to understand what DNA is. What does it stand for? Yeah. Don't make it a formula. Don't get lost in numbers. Try to understand what are we trying to achieve through DNA. What is it exactly that we are trying to objectify through DNA, right? Do not consider DNA as a formula or something very rigid. That's never the point with any of the concepts. Try to get through the concept. What am I trying to give you, right? So at times, because this question comes, what about time frames? Right now, I want to keep it simple. So we'll tackle this question again when we are on the topic of time frames. But for now, simply treat time frames individually, right? And try to understand through common sense. Like if somebody's studying a 5 minute time frame of index, right, Nasdaq or Nifty, whatever, it's obvious it's gonna be entirely different from a daily chart of a stock which is moving up a lot, right? So try to see what is the DNA of 5 minute time frame of Nifty, and you'll have a great idea. Okay, what can be expected? How can it be expected? And I'm pretty sure there will be a few questions by now about is DNA consistent for a stock or does it change? And is using change the right word or there's something happening? Because at times we see a stock is moving up 5%, suddenly it moves up 20%. We thought it will go up 5, but it starts going up 20. So is it purely random or are there triggers for that? We will explore all this. For now, I want you to spend time with all these things. Okay, let's move on. Let me share the screen. And I think I have not shared the results of challenge, right, with this batch. There are some interesting numbers for you to see actually, which you will see very, very soon. Okay, I hope you can see the screen. A few basic questions, right? Keep it engaging, right? Participate in this. This is extremely important, and a lot of people make this mistake. Now, let's say you're coming from somewhere, you have learned trading technical analysis from somewhere. some social media, somebody taught you. Somebody taught you, I'm pretty sure, some patterns, some particular expressions of demand and supply, or whatever the case may be. So let's say you're trading a stock, okay? We'll make some necessary assumptions. So it's a stock and it's a D time frame, all right? And let's say the pattern, whatever you have learned, is something like this, okay? They tell you due to some conditions your trigger for buying is here, right? You buy here. And the setup says that, it is expected to work like this, okay? So you buy somewhere here and you make money when the price goes up. Along with that, they'll probably give you this crap that, risk reward of this is 1:5 and the win rate is 30% or so. So in the long run, it's gonna make you money and shit. Okay. But has anyone ever said or thought about this? That hey, why 30? Like, why? Why is it not 80? Why is it not 60 or 70? Is this by design? That, well, this is how it is. Or there's some actually logic to it, some reason to it. And is this for same for everyone, like literally for everyone? That will only work 30% of the time. Or is there more to it? Has anyone ever thought about all this? Again, it could be the famous author you're thinking about, but there may be famous by chance, by luck. But anyways, that's not the point. But I'm pretty sure you have come across all this, right? Risk, reward, and win rate. Anybody ever questioned this? Anybody ever thought about this? Anybody who wants to share anything about this? Anybody ever asked other people that, hey, why is this? If you ever did a course and somebody said this to you, have you ever asked? If yes, what were the answers given? Yes, Kundan, please unmute.
Sir, I have done the course in last year
हाँ
and I have asked the same question to my mentor
ठीक है
कि why 60% ही क्यों, why 60% or 40%?
okay
They told that it is the game of probability.
hmm.
If you have the deep knowledge about the probability, then you will get to know why this is 60 ही only or 40 only. Means there the data they showed that my strategy works 106 times out of 10 times on a long run. So it's 60% like that.
चलो ठीक है fine, I'll take that answer. I suppose you did run that strategy, right?
Yes, sir.
So what was the case
Yes,
with you?
sir.
So what happened?
Sir, I was not able to maintain that discipline because out of fear that my SL will gone or I was not able to hold that profit for long time due to I was not disciplined. So in the long run, I didn't make money from that strategies.
Okay, so basically, okay, you are saying the person who was in charge to execute that was not
Yes,
really
sir.
fit for it, right?
Yes,
So we
sir.
cannot comment about it personally.
Yes, sir.
Absolutely correct. ठीक है, fine, all right. Deepan, can you unmute and talk?
Hi, sir. Hi, everyone. So, sir, I didn't do any course and all, but I read Mark Minervini and William O'Neill, right? So, again, from their books, what I understand that you should have like 6 stocks or 5 or 6 stocks, and you should look to book profit at 20%, and you should keep a stop loss of like 6%. So, what I understood, like why we were doing that is, let's say you have a hit rate of 1 out of 3 or 2 out of 6, right? Then you are still making money if you are booking losses at 6% and booking profits at 20%. So I will again, that's something that I deduced probably, but I'm not sure that's correct or not.
चलो ठीक है, but did you ever question like why? Have you ever thought about this?
Sir, what I observed is booking profits at 20% well, sometimes, like you said, right, it goes up till like 14% and then falls down to 6% and you book at 6%. And sometimes you book at 20% and it goes up like 100%, right? So those things happen. And then I was like, "Ki, yeah, 20% is not making sense." So, yeah, I mean, I didn't understand why I have to book at 20%. But I mean, I told myself that I have to take like 5 or 6 stocks because of that logic
Correct.
of both.
So you never question, kind of, right?
Not really, no.
Um, ठीक है.
Because I was, making okay money in the market, I would say, you know. So I was like, कि ठीक है, थोड़े सालों में हो जाएगा better. But
Correct.
then nothing really happened.
Yeah, it will not. Correct. ठीक है, fine. Okay, I understand. Mayank, can you unmute?
Yeah, hi sir. Am I audible?
Yes, you're audible.
Yeah. So I had asked this question. So the response that I got is basically you need to respect the market conditions. Also, one of the answer that I got is like most of the time the retail players they are the weak hands. So when the price moves like around 5%, 10%, they tend to exit. So that is the main situation. And then the stock sometimes goes into accumulation stage, and that period may be long. So that is what was response to me. And again, what Deepan and Kundan said that even if I lose 7 trades and if I'm making 3 hours, then still I'm in profit.
Okay. Okay, so I'm pretty sure you followed through this advice and did as instructed.
Yeah, but I was not, successful in that, sir, because of the discipline issue also, and plus I was not very sure or convinced about some of the stocks that I selected.
ठीक है.
So I always made more, losses than rather than be successful.
चलो, okay, all right. Deepak, you're on mute. Yeah,
Sir, good afternoon.
good afternoon.
Sir, I have not done any course as of now, but I have gone through a lot of videos. I used to see majorly this range breakout videos, wherein they used to mention ki, okay, the range, what is there. So you just take the measurement of the range and, just
Got
you'll
it.
get a risk reward
Approximate.
ratio of that much.
Yeah.
But many of them used to say ki, once it does the pullback, then you can buy.
Correct.
But many a times we see that the stock doesn't pull back only at that level.
Correct.
So I've just done a paper trading on that. So I see it doesn't work much as what they say.
Okay. Okay. Because I mean that is because oversimplification. Well, the advice is good. It's okay, but it's just oversimplified. It's not as
Okay.
simple as it seems. But ठीक है.
Yes.
Kapish,
Thank you.
Can you unmute Kapish?
Hi, good afternoon, sir.
Good afternoon.
So after listening to Deepak and all the people and after reading the text, I guess it's all about I would say, mathematical fallacy. Like I also did a course, and in that course, like there was a proper setup that they taught me. And while teaching us, they made us believe like these are probability, like these are generic probabilities that you have, and based on that, they round some numbers like out of 5 trades, out of 4 trades, some will pay out, some will not pay out. But at the end, net you will get out. No one really actually questions like what is actually happening background, like why these numbers are coming up or not.
Correct. And did you do this? Like, did you actually follow through this, following this win rate and risk reward theory?
So actually, when I initially started, I tried to make a journal, like what were the mistakes that were happening to me.
Correct.
Not in terms of proper numbers that I did, like what were my overall gain or not. I took some screenshots. But the thing was, the context was always changing. Like for example, there was one setup that they taught me, like the flag one, the basic one. But the problem is flag in itself is very context dependent. Like is it at the all-time highs? Is it at the all-time lows? Is it in the consolidation? There's so many nuances to a single trade. Like you can't just have a generic framework or a probability. Like that's the whole case for myself.
And did you trade on this? Did you put money on all this?
Yes, sir.
And did you do it the way you were expected to?
Sometimes, sir. Yeah. Sometimes it actually happened. Like, for example, there were 1 or 2 trades, like I was making a gain. But subsequently, like in the next Because it was all a losing game. Like neck to neck, it was zero.
Exactly. Okay. So in your experience, there was no money coming in around, right?
Yeah.
Okay. All right. Great. Rehan, can you unmute?
Yeah, hello, sir.
Yeah. Hi.
Yeah, first of all, thank you, sir. The lectures are quite wonderful. I wanted to thank you for that. In this case, I had taken some courses, and the general question, the answer that I got for this question was to manage greed and the risk to reward as well, which everyone mentioned, because probabilistically it is required to maintain the capital. You have to save the capital. They were promoting this line very much.
Correct.
But afterwards, I understood that by myself, when I was studying, I had this question in my mind as well. So I tried to understand while reviewing stocks and everything. It was also a question of potential. When you are watching a stock or any security on a particular time frame, it won't move the same on all the time frames. So where you are entering and how you are entering is also a thing. But the time to price scale on which we are watching the chart is also of some essence that I was able to understand, but I wasn't able to navigate as much as you are helping us with a proper system how to look at it. So I just understood this dynamic.
Correct. Great. Okay. So, even your seniors, a lot of them were actually previously active on Twitter or YouTube and all that, and have done some courses. And they actually followed through all this of 1:5 risk reward and 30-40% is to win rate. But they all literally said, well, it seems like it's working for this guy on the internet, but for me in my account, the money is simply not there. Or I'm just flat. And look, when you take this decision to handle the money yourself, to start trading, you are not here to make as much as the index is probably making in the 10 years or any other mutual fund. Because if that is the case, you are much better off putting the money in some ETF or mutual fund and just relax and not take this additional skill, right? That's a big assumption that you have already made. You're gonna beat the market by a lot. Then only it'll make sense. Otherwise, it doesn't. So, and then people are like, stay in the game, have patience, protect your capital. But okay, for some time it's okay. But well, I've seen people spend like 10 years and they're literally where they were. Doesn't make sense. While your broader index, like a Nifty, has actually moved 70, 80, 100%. While that person is stuck in some illusion. So let's not talk about it. Okay. Let me see on the chart. Few people have written. Dev Shah says, I think it's because of the risk reward dynamic and the way market and nature works. Something gives high reward, then it'll obviously have very low success rate. Like the game of lottery. No, you can actually have good of both, and your seniors have actually done that. The returns are triple digit. The win rate is more than 70%. You can have that. It's just that you have been put in a deep sleep, right? I don't think anyone or any course has made us question the percentage gain. They always teach TSL is God. You get what you get, the rest is ignored. Yeah, I mean, it is more on protecting capital. When you start losing, is the advice. Exactly, that's what I'm saying. So one has to see that in 10 years, if he simply put monies in some mutual fund or ETF, how much he would have made now versus how much he has actually made in trading. I think it works only in option selling spreads, because in the spreads there is fixed log profit or it's not even worth it. ठीक है, okay, fine. Let's actually discuss. Okay, it's more about selling the numbers illusions. Actually, the point is nobody knows the concept. They just don't understand it. Now, if you question that, they have to use some defense, and that's where the risk reward comes in, right? Chalo, let's talk about it. So let's say this is kind of the pattern, right, that you have been taught to execute over and over and again. One setup, master one setup. But in your experience, what you actually see is, let's say it is boom, you took a trade. So let's call it number one. Fantastic, right? Probably went up 100% or so. Okay, you took another trade which went up like this. Number two, you took another trade like this, and actually it afterwards did this to you. Okay. Third, you took a trade which actually did this. Fourth, okay. I'm pretty sure if you're trading, you did something, you probably would have come across all the four cases mentioned here. And kind of this is something that everybody experiences. Whatever markets, whatever the instrument is, this is usually that happens. Either you're making a lot, sometimes those stocks fly up like anything in a very short duration of time, pretty exponential. At times, well, the average stock 28 to 10%. At times it's just 5 to 10%. At times it's literally minus 10%. It happens, right? And now if I talk about the frequency of this, from a frequency perspective, if we rank them, which one happens the most? It'll usually be the third or fourth. True, the most. Which one should I put at first from frequency, from everybody's experience? Can you just write it down in the chat? 3 or 4? It's 3. And for 4, what should be given the frequency? Third or fourth? Okay, so fine, let's first get this. So scenario number 3 usually happens, right? So a lot of frequency. Now second, which one? Second or fourth? Which one should take the second position in frequency? Okay, so 2, 2 and 4, 4. Okay, so it's kind of a draw. Looks like it's more about चलो ठीक है कोई बात नहीं, that's okay, we'll treat 2 and 3 as the same. So I'll say चलो ठीक है 2, I'll say 3 for those. I'll also call this as 2. Fine, pretty personal. And this is obvious for everybody in the market. This is fourth. So usually it happens that the stock works sometime in our favor, eventually comes back down completely. But then it's like usually they simply don't work. They work pretty good. And well, yeah, rare cases this happens, right? All right. Why? That's the question. Like, why? Probabilities? Chances? Randomness? That's a very limited perspective. That's a very, very limited perspective. Maybe you're saying this because you haven't explored, right? You don't have the right tools, never bothered to do it, right? You still think Earth is in the center, right? Why does this happen? So let's try to understand the basic things. Well, DNA, not exactly. Not exactly. The question is why sometimes it works really well, sometimes, well, yeah, whatever. Sometimes okay, but then a lot of times it doesn't. And this is the frequency distribution of this. Shallow, let's see it. So I'm pretty sure you have learned about Dow, right? It's about trends, literally basic and simple. We also have Nilay here. Nilay is here. Nilay, can you write it down? Are you free right now? Or are you occupied somewhere outside? Just mention in the chat. We'll have a word with you as well towards the end. So, pretty sure everybody has seen Dow, right? And Dow is so basic, yeah? Like, it's so simple. What is in Dow? This or this, right? What's a big deal about it? No big deal. It's so simple. It's so basic. Who even cares? But the point is, everything today that we have is literally built on this. Like trends, the topic of trends came from here. Stages came from here. Wyckoff came from here. Whoever comes from here. So this is the foundation. This needs to be extremely Strong, right? Now imagine, there's a person who's a known red flag, right? A manipulator, plays games. ठीक है. And there's a guy, pretty good, green. Now, suddenly you figure out he's being too sweet, he's being too nice. What will you think right at that moment for the A guy? If he's being sweet, you know, like he's kind of trying to behave like a green flag. Historically, he's notorious. So, what will you think in your mind about A at that point? Something's fishy, right? Hidden motives, exactly. He'll be cautious, right? The word being used is cautious, right? And the B guy, if he's being great, what will you think? Normal behavior, right? It's expected, good, right? The same is with the stocks. You just need to watch them in the right perspective. How is that? Let's see. Let's say, okay, there is a stock. I'm pretty sure we have discussed in lecture this thing called as a downtrend, right? Can you just let me know in the chat? Yes or no? So that I believe everyone's aware about this word. Downtrend, what exactly is it? We have discussed it, right? Downtrend, uptrend, and range, random. Okay, all right. Now imagine there is a stock which is in downtrend. And he suddenly starts doing like this. Now, I watch this area. People call it as flag. Okay, that's right, because it looks like a flag, right? So then it's called as flag, right? And there is another one, and that guy is hysterical. You know, समझ नहीं आता what is he doing? What is he up to, bro? You just can't. Unpredictable. Which is what? In terms of stock, that is a range, right? Random areas. So let's say, okay, we have this pretty similar looking. Then we also have a guy, pretty good. Crap. Which is an uptrend and pretty good guy. He also has this. This is the picture that we have in front of us. Okay. Now, if you just focus on the blue circle across these three areas that we have seen, they all look the same. It's literally the same, right? But what's different? Can you tell that? Is the, yeah, I mean, trend, past action, context, or location, right? It's kind of like called as a bigger picture. And this is exactly what people miss. Why do they miss it? They are lost in formulas. Because that is something that they have been taught. They don't know about perspective. They don't know what is a location, what is a behavior, right? And how to treat it. They're just simply focused on this. And what do they say? They cover it up with risk reward and win rate. Now just imagine if you just deal with this guy always, you always look for this. What's going to happen to your win rate and risk reward? Can you explain? What will be the outcome? It'll usually be negative. You'll usually see negative results basically, right? Most of the times it simply just doesn't work. Yeah, there will be times, maybe one or two, where it actually works really, really well. But in the long term, going probably in negative direction, right? Not even flat. Okay. What if you deal with the range? The results will actually be really random, right? But pretty similar to downtrend. Maybe this time you will be in a bit flat. And what if you actually simply choose to deal with this guy? What's going to happen? You'll usually be extremely positive, really great, right? But if you mix it up, you don't have the awareness and perspective about downtrend or range or uptrend, and you mix it up, what's going to happen? The results will be random, right? At times it works really well. The other times it's simply, I don't know. I don't know what's happening. And this is pretty simple perspective, honestly. There's nothing complicated here. But once you actually realize this, you will understand a lot. Okay? It might look very simple to you right now, and there is a lot going on over here. But just try to see it. And what I can tell you is if you try and go watch your past trades that you've taken, the ones that worked really well, the ones which, well, did not do much, you'll actually see what went wrong over there right now through this basic lens of Dow theory. Okay. Now imagine that, well, with the A guy, right? The red flag, the manipulator. He has something to offer you, right? But you know, this is who he is. He's something to offer you. He has a deal. And well, you are a risk taker. Okay. What are you going to do? How will you proceed with the deal with A guy? How will you design that? How will you go? What will be the plan of action? Can you tell me? Less risk, less money. Okay. But see, even less money is money, right? Fixed minimum risk. Even that is a risk. The point is you are taking a risk at there should be some conditions, right, on which you will be accepting this. Always prepared for the worst. Okay. I mean, the point is there is a simple choice that you can simply walk away that you have here. But you are not doing that. On what conditions is the question. Maybe do the deal with strict SL and maybe lower position size. Look, the point is risk is inbuilt here, right? That's inbuilt. What will actually make you go through it? Because if you actually decide to take a risk, which simply means that you're actually looking for something, which you see something that there might be something great here this time. That's your thought process. Risk is inbuilt here, like we all know that. I'll go with the behavior of A. So like what? Reward. And it looks a great deal. But the point is, what will compensate for his behavior? right? So you know what you're going to do? You will be thorough with the deal. You'll make sure literally every single thing is in place, right? And you'll also not let your guards down. You will be prepared as well, right? Do you get the point that I'm trying to get across here? It's extremely crucial. So you're like, okay, historically I just crap, okay? And certainly if he's so crap, he's so bad, there must be something that is actually able to cover it up for it. If you smell anything off, you should not take that deal, right? Why? Because already you are at a disadvantage here, right? You're dealing with something which historically has been notorious for this. So you need everything should be lined up perfectly. If anything, literally, if anything is fishy, you find something, you're gonna back out, right? You're gonna back out, right? Oh, this will be much more clear as we go ahead and explore a lot of concepts. But I've tried to give you some hints here. And I think you will do the same with range as well because that guy is just too volatile, right? And you don't want to get caught in that. Yes, at times it's really great, but at times it's really bad. So you don't want to get caught. Again, same thing. Let's say it comes to this guy. Now what? What is going to be your approach here? Can you tell me that? Can you describe that in the way we have done it for the downtrend and range? Can you please tell? It's positive. All right, but what's going to be your approach like? Details of the approach. I know it will be all of that. We will be more confident and avoid any blunders or change in characteristics. Analyze DNA. I mean, that is all done, Baba. It's great. It's good. Can be little carefree, even not. Everything is perfect. Okay, good. Maybe take a higher risk. All right. Open to the opportunity that great guy has to offer. Okay. Give it a little bit of room. All right. Offer high potential. So SL with proper sizing. Okay. I'll still be cautious. Okay. Invest more capital. Okay. Trade the stock with good amount of money. Invest. All right. ठीक है, that's okay. Correct. So the this is the approach, right? That will be there. Can be a bit relaxed over here. Obviously, do not trust blindly, but at least there'll be difference in the approach that you have for the uptrend versus for the downtrend, right? And that's something really important to have this discernment, right? To have this discernment. What are you dealing with right now and what were you dealing over here, right? This is extremely crucial. Anybody has anything to share till this point? You can raise your hand. Yes, Ankit. We cannot hear you, Ankit, right now. There's some disturbance coming through. You can write it down. Now, look, somebody talked about probabilities, right? Okay, now the question is the probabilities help you decide whether you want to go ahead with the chance or not. Okay, that's what probabilities are used for. If somewhere the probability is a lot higher, I'll certainly take that bet and probably even better than the other bets. If a bet is offering me very less probability, I'll have an entirely different approach. Okay. Now tell me, what is the probability of this happening in this case? will be very less, right? It'll not be 50. It will be somewhere around 20, 30, 10. Pretty less, right? Ankit is saying, I don't understand the core of what you are explaining. That's all right. Watch this live session once we have done lecture number 10 or 11, maybe. You'll get me then. All right, so the probabilities will be extremely low. Okay, let's say maybe just plus 20%. What are the probabilities of this happening? 40%, 50%, 50%, right? Pretty good number, honestly, for a range. What are the probabilities of this happening? 70 or 80, correct? Clear differentiation. And now your probability of making money from the market depends on how do you analyze probability. Probabilities are always there in front of you. That's exactly what technical analysis is used for. To take into assessment the probability of the direction that you're looking for. If I'm looking for an up move, technical analysis helps me gauge that probability, because that in turn is going to help me to decide whether you want to go ahead with this, and if yes, how much. This is what probability is in the markets. Probabilities are not here to justify your blunders or your lack of understanding. Well, this is how the market works. No, no, no. That's never the case. Never. Right? So that's kind of making people a fool using mathematics. Right? Kind of sound like an intellectual, feels like who knows a lot, but in reality, it doesn't. This is what probabilities are. Now, again, if I simply stick with this, like I'm saying, hey, it's okay whatever you're giving me, but I'm just not interested. I don't like it. I don't want this kind of risk. I'm happy to go ahead with it. And I'll just stay here. Fine, good, great. You're like, hey, I want a bit more risk. Fine, I'll go ahead with you, right? And now somebody says, no, no, sir, I want all three. I want to be great with this. Like in probability, I want to be in this plus 20%. How can I do that? The answer is yes, you can. Technical analysis can actually help you. And we will see as we progress ahead in our journey when we understand other concepts that how exactly that is possible. So that's really, really important to understand that what are you dealing with, where exactly you are, what can be expected. This is how probabilities are used. Because what I believe in, the truth is what you experience, right? Not what anybody else says. And that's exactly what happens here in the academy. People also come, with this uh, risk reward. This is exactly what they have learned. And I literally ask them a question: have you ever experienced this working really great over a long period of time? Usually the answer is no. I do give it some leeway. Probably you did not execute it well, because that is one of the major factors. People think they don't have a role to play, but it's not that. You matter a lot, and that's exactly why we learn about perspective. Because if you don't have the right perspective, nothing's gonna work, honestly. Like, it's like, even if I give you, let's say, a strategy where the win rate is 80% with a risk reward if 1 is to 4, if your perspective is not right, you're gonna end up in loss. No mathematics is gonna come and help you. That's extremely crucial to understand. But if the perspective is right, you can actually make money, great money here as well. But eventually you will find if you do it well, you will land up here only, doing great. Because you are picking out from that 30% and you're able to filter out that 70%. That's the important part. Extremely crucial to understand. I've seen a lot of people being involved over here. Makes no sense. While simply missing out on this, which is clean, simple. But for some reason, they spend a lot of time here. So this helps you. And now again, this becomes a personal choice. Nobody is there to tell you that, okay, do not deal with it, right? Nobody's there to tell you, okay, only deal with this. You got to do what you want to do, right? If you feel you're really great, you understand everything, you can get through it, then certainly there are some amazing stocks present. Okay, that's the perspective. Have an open mind, and once you have learned everything, then you can go ahead and build your own personal boundaries. That okay, I've seen everything, I'm aware, I know, I only want to deal with this. Right? Maybe you are an extremely busy person, you don't have time. So certainly it's best to optimize it for a lot of efficiency. So you will be happy dealing here. Not here, but somebody has a lot of time and he has a skill, he knows, then he can actually get a lot from here as well. That's the right perspective. And you will actually see this happening in a lot of stocks, especially in NASDAQ. A lot of stocks are actually doing this thing. Great opportunities are there also, right? So this perspective, having this perspective is important. Keeping an open mind is actually really important. That's kind of the major takeaway from here. Anything over here? Any other doubts? Any questions do we have here? Now, one more thing. I'm not sure in the Wyckoff lecture, have I talked about why we do not use accumulation and distribution? Like what is the reason why we do not use those words in the academy in the sense they have been used in the book?
Yes.
Okay, we have done it. That's okay. Fine. And anybody has a question over there? Any doubt from that comes through in your mind? Any other observation that comes, you can raise your hand. Because it's more on hindsight, something it's accumulation or distribution. Exactly. Small recap of this session up till now, please. You can go through the recording and have a great revision as well. Sit through this session aram se and you will actually understand. And you will get, as I said, take a note of this. Come back to this live session. After lecture number 13th or 10, you'll have a lot of clarity. You'll actually see through it. Okay, what is being talked about. In fact, I'll probably talk about a lot of stocks as we move ahead. So can we really distinguish between ranges? What do you mean by between ranges? Like which one to trade? Yeah, why not? Obviously. Oh, you can, yeah, you can do that, certainly. Why not? I had a very basic question regarding higher high and higher low. Should we look at it from a single candle perspective? If the candles are overlapping, or a group of candles? What do you mean by candles are overlapping? Like, what kind of a perspective are you talking about? No, makes no sense, honestly. That's not great. People often recommend buying big name stocks that are correcting in price, but we end up blocking our money in a single stock for 3, 4, 5 years. Absolutely wrong approach. So big names as in what? Reliance and all those stocks? Infosys, TCS. Yeah, I mean, ठीक है, मतलब that advice actually lacks a lot of context. But ठीक है. Okay, let's actually talk a bit about the next lecture that you're about to get. And this is a diagram that we are going to extensively use as we move ahead. So let's say we have a stock, right? And it was in a range. It does this. Okay. And then kind of starts doing this. All right. So we have a zone here. Then we have kind of like an uptrend here going up, right? And then we have an area over here. Okay. And this is probably how a lot of charts will look like, right? More like a realistic picture over the Dow ones. Now I'll mark a few points here. So let's say I mark this one. This has 2, 3, 4, 5. Right? Contraction areas are marked over here. I'll also mark a point where you came out of this green box. Call it 0. Which is the best place to come in? Which is the best place to buy? And let me mark one more. Let's say literally right here. -1. Which is the best place to get in for maximum benefit? The question is, which is the best place to get in for the maximum benefit? If you want to make some changes or anything, you can do that. The answer will be obvious, It's -1. Question is maximum benefit. There's no point about 1, 2, 3, 4, or 5, or even 0. -1. That's the lowest, right? So you kind of want to buy the lowest of the lowest and sell the highest of the highest. But most of you still gave answers like 0, 1, 2, right? What makes -1 a problem? And why not -1? Like, are there problems with -1? And what are the problems? What do you think that is? Range, still in range. Okay. So it's kind of like, I don't know what's going to happen. It's a range, it's a random area. A lot can happen. Right? Yeah, exactly. We cannot find -1. Yahan pe, in the hindsight, obviously, I understand, but the uncertainty is just too much. Okay. What is the problem with 0.0? Can you tell me that? Price may go down. Okay. But I think that can be said for literally any other point, no? Why just 0? For 1 also, for -1, for 2, for 3, for 4, for 5. Can be a false breakout, may come in range again. Not confirm about breakout, fake out, bad entry. Why Rehan? Why is it a bad entry? It's a breakout buy, price can be higher. Can be fake. Not sure if behavior change. Structure not confirmed yet. Okay. Correct. And what are the good things and bad things about 1 then? We can still be in range. Risk is high and probability is still low. At 0. What about 1? Like pull back with contraction. Okay. Low risk. What do you mean by low risk? Like, what does it mean? Low risk. Because let's say if I'm risking 6 lakhs or 10 lakhs, well, I'm risking it. So what's the low risk about it? If I buy at 2, I'm gonna risk 6 or 10 lakhs. If I buy at 1, I'm gonna risk 6 or 10 lakhs. What's low about it if my risk remains the same? One has created a higher low. See, at point 1, you're actually not sure whether it's going to be a higher low. You can only anticipate. It might be. Not necessary that it'll be. Pullback has stopped above range. Point 1 is the best entry because, again, what is fixed minimum risk here? Structure established at 1? Not really. A higher probability than -1. Okay. Okay, so somebody said low risk. Alam, can you unmute and explain yourself? What do you mean by low risk at point 1? If you cannot unmute, you can explain through the chat. Siva Prasad, can you unmute and explain what do you mean by fixed minimum risk?
Hello.
Yeah, hi.
The between 0 and 1 is the minimum risk.
Why? What do you
If
mean by
it
minimum risk? Like,
if it goes below 0, we take stop loss. That's why minimum risk.
why will you take an SL below 0?
Because that is the breakout point.
So,
We are just risking only limited risk.
no, risk is on me. I'll risk a crore here. What is minimum about that?
Okay.
What do you mean by minimum risk? Okay, maybe I'm risking 1,000 rupees. And now that is a minimum risk. But then I'll earn maybe 5,000, 4,000 only. So what is minimum? Like, can you explain? What is a fixed minimum risk? Or what is a low risk? What do you mean by that? It depends on me, don't you think so? Okay, how much do you want to risk, sir?
Okay.
So I'm like, I'll risk 1 rupee. So you'll say, oh, that is a minimum risk. I'll say, I'll risk 10 lakhs. You'll say, maximum risk. So, like, what is it?
Because we know where is the SL. If it goes below 0, we can take the SL, right?
That is a case with minus one also. If it goes below that line, I'll take the SL. In fact, that is applicable everywhere.
But in that case, there is no proper breakout. We don't know exactly it goes above or below. But in the case of 0 or 1, we have some trend.
But that is also the case with 2, 3, 4, 5. So don't you think 5 is the best then for a minimum
Then
risk?
in case of 2, 3 or 4, we have to take bigger risk. I mean bigger SL.
Why?
Because the trend starts at 0. If we take entry at 3, we have to bear stop loss from 0 to 3.
Why
If
0?
we take entry
Why?
at 1,
But I
we
have
take
structures in
sir.
between, no? I have higher highs and higher lows at 1 and 2. So why at 0 only? 0 is a thing of past, no? Once you have had 1, 2.
Okay, there is a probability it goes below 0, right?
At 3.
No. When it goes below 0, then only trend changes.
No way. That's no, wait. So what you are saying is, let's say I have a trend, right? Like this. So what you're saying, like, you mean to say that, and let's say there was some breakout that actually happened with this guy, right? So it kind of broke above a level. So you are saying to me that if the price starts doing this, oh, this is not a downtrend, or we are still in an uptrend until and unless we have breached below this point.
Yes, maybe in terms of time frames, it difference.
I don't know what you mean by time frames. I have a clear structure here.
Okay.
Correct. So the point is we are justifying a flawed idea, right? So this is really bad. So the point is it's less about risk. It's actually about maximum reward that you're trying to talk about, right? Because if I enter at 5, my reward is what till this point. If I enter at 1, I have a lot of reward here. And in that sense, you mean to say for the reward that I'm going to get, this is risk, right? You are open, let's say at 1 you're open for a 1:5. Basically the reward can be a lot, multiples of risk, which makes it look like less. But if I buy at 5, probably I'm getting a risk reward of 1:1, which makes ki risk is as much as the reward. Do you see now? Do you understand?
Okay, sir.
This is what this is. But I've seen this low risk minimum risk on the internet a lot, and I just don't get it. What do you mean by that? Because if I lose at 1, maybe let's say 10 lakh rupees, how is that minimum, Baba? Right? And if I lose, let's say at 4, 10,000, then certainly that is minimum for me. So it's less about risk. It's more about reward potential, which kind of justifies the risk. That's the right perspective. Thank you, Shiva, so much.
Okay, thank you, sir.
Asim is saying pullback is out of range, so probability to go back in range are less, and range trend is broken. Okay. Creates a higher low. No, at point 1 there is no higher low. It's a potential point where the stock can actually create a higher low. But what if a point 1, what happens? Okay, you never do this, you rather just do it, and you do this again in the range. Where is the higher low now? You had a high probably, but the low still remains. So where is it? Where is the higher low? So hindsight, na? Once this entire move has happened, then you can be like, "Arey, this was a higher low." That can be used to post on social media and probably woo some people. Cannot put money like that. That is the importance. So again, you see how important this was, and the only thing that was lacking was the right perspective. Otherwise, you can do whatever justification you want to give using technical analysis. If the idea is flawed, it's not going to work. You will find it difficult. So forget about all this minimum risk, low risk. It's rather about probabilities, right? So now let's say I'll also give you one more perspective from a technical point of view about low risk. So let's say we have an uptrend established, okay? And let's say what happens is you actually buy the stock at this point. Okay, you buy here. Now this point becomes not really ideal. Okay? Always pay attention to the words I use. I'll never say it is a bad buy, it is a wrong buy. It's not ideal, okay? It's not efficient. Can you explain why? Why is that? Tushar is asking from what you said, if a stock has run a lot, risk reward becomes lower. No. That's not the point. I'll come back to this. But right now, let's focus on this, okay? Buy here is not really ideal. What's the reason? In fact, there's a lot of risk. It's a high risk. Okay, let's use this word. It's a high risk buy that you're doing. Now, can you please explain yourself? Late entry. Okay. Not really the answer. That is missed a lot of reward from previous up move. But then you're also assuming that now the stock is not gonna go up, right? What if now is the time it just goes to the moon? So what? Stock already has moved. So what? Stock has run up. So what? What if it moves a lot from now here? Who knows? Nobody knows that. It's an uptrend. That's what we studied. Right? It's his behavior to keep going up. So maybe already rallied. Why are you calling it an end? Who told you this is an end? Why are you talking about missed reward? Why are you not being optimistic and like if the stock is in an uptrend and I feel it's gonna go up and keep doing that? Maybe we are just getting started. Structural reference point for our stop loss is far away, less place to manage the trade as well. Why less place to manage the trade? What do you mean by that? The downside in terms of previous low is too low. Price is at the top. Price may lose the movement. Again, these are some wild assumptions you are making. Stock is in expansion phase already, so we are not sure if it's. But you are also not sure how much potential this guy might have left in it. Again, price might be at the highs. Why are you assuming so much from a negative perspective? Wait for the contraction. How's that gonna help you? How is that gonna help you? That's exactly the question. Why is this point a high risk buy? Not getting the maximum rewards that you could have gotten. Again, the point is, what if it literally goes the highest ever it has gone now, right? And again, already gains are left. The point is, it's an uptrend, Baba. It can just go to the moon. Wait for pullback. Maximum buy should be in range. The point is, you're not getting the point. My question is, why that point is a high risk buy? Why are you buying here? I'm making you buy there. Okay? And now I'm asking you, you tell me why this is a high risk thing. If entered at high average price, one can't give so much room for the stock to perform. Why? If it dips a bit, one will already be in loss. So what? I don't know why it is high risk. That's the question. That's exactly the question, right? So when people talk about high risk and low risk, high risk buy as SL will be higher. Interesting. Okay. Getting close. Let me answer this for you. All right. Till which point it's all right for the stock to do whatever it is doing. So it's an uptrend, right? So higher high, higher high, high low, high low. Okay. And a low. It's an uptrend, right? Ideally, what's the point? That well, it's a high low, right? Till this point, everything is just all right. The stock can do this. Stock can do this, or stock can actually do this. Does it change anything? No, right? All these cases are open, right? Correct. Now, what exactly is mean? So there are some assumptions when you talk like this. When you talk like, oh, this is a high risk point, this is a low risk point. Let's say this entire thing happens to be 10%. Okay. And you buy her. And you tell me, I wanna buy worth 10 lakh rupees. Okay. At this point. Now let's say the stock comes back. It comes back almost the entire 8%. You are down 8% from here. So what? Does that change anything? Stock being down 8% from where you bought, does that change anything for the stock? What's your answer? Hey, Arjun is saying yes. What does that change? Can you explain? It will create fear. It will create fear. Why will it create fear? Can you please explain? Mayank, all right, that's okay. Can leave. Can you explain? It will show loss in screen. So what? Till the structure is intact, it is fine, right? Exactly, right? Nothing changes. It's you. It's you who gets scared, as Arjun said, right? Fear, because there is a loss, right? We'll be prompted to exit, right? Gets on our nerves. Exactly. 80,000 drawdown, maybe not good for someone's perspective. For some, they can still hold that position. Exactly. Don't you think that's something that he should have taken in consideration when he was buying? Yeah. Because anything could have happened, right? As I've drawn on the screen. But as a sane person, you should have accounted for this. Now you cannot complain. You know? So nothing changed. Now imagine what happens. Let's say where the problem will start actually structurally, right? Technically. When this guy goes beyond this. Not a little bit, but it actually does this. Well, that's bad. This guy was doing really great. I can give it some leeway, but not this much. If it is doing this much, then something must be up, right? Something must be wrong. Maybe the structure is about to change. This is where the problem will start. But only after this point, and not even just 10%. Maybe you will give it some room. This is a good guy. You gotta give it a room. Somebody mentioned in the chat, right? When I asked you. So you will say you will give it a room. So once it is down from this point 12% beyond a few points below this, you're like, okay, now we have a trouble here, right? How much you lost in this case? 1.2 lakhs, right? 1.2 lakhs. Now imagine when it was down 8%, when we were actually over here, you bought it here. Okay? And let's say it comes back down, keeps falling down. How much will you lose? 2%. How much did you lose? 2% of 10. Now do you understand what is high risk and what is low risk? This is what people mean when they talk about low risk and high risk, right? The risk is basically the amount of money, because this is something that they are keeping fixed. This is a constant. Keeping that in mind, then we talk, this is a high risk buy point, because if you lose, you're going to lose a lot. And then this is such a low risk point. Why? Because if you lose, you're going to lose less. This is what they mean. I hope you understand this. Is it clear? Does this open your mind to these vaguely terms used by people? People do it unconsciously. They don't have an idea what they're talking about. Sleepwalking humans, as we say. Right? So this is one perspective. The other perspective about using words like high risk and low risk is then in terms of probability, right? In which they actually mean, if somebody says from a perspective of probability, he says, oh, you are taking such a high risk trade. It simply means the probability of it gonna work for you is less. Okay, the probability is less, so obviously there is a high risk that you are gonna end up losing. And if somebody says it's a low risk trade, they're usually talking about the probability is more that you make money, right? So certainly it's a low risk. Yeah, these are two perspectives. Now it depends. You got to ask a person, hey, what do you mean by high risk or low risk, right? Are you talking from a perspective of the capital that are going to lose, or is it from the perspective of the probability of the trade working in my favor or not? Tushar is saying, aren't we supposed to size trade according to the percent risk one wanna take? No, that's some theory somebody has made, right? Doesn't matter. Like I'm somebody who has a very fixed kind of capital that I take on. So yeah, that's just one theory that you know. And probably the theory everybody talks about and speaks. That's not how trading works. There's so many perspectives to tackle the problem over here. That's exactly what makes trading what it is. Then, sir, what is the right perspective for understanding risk? If not capital loss, we'll exactly see that. What do you think it is? You tell me. You have actually all the data to come to some conclusion based on this. What do you think is the best case here? What do you think? There's actually a really important lesson right in front of your eyes. Don't talk about specific cases. Like Tushar just said, buying around potential higher low, and that's a very specific technical case. But from this, what do you understand? Anybody who can unmute and tell me? Taking 2% risk here, that's crap. That's bullshit. Minimum loss potential? Oh, okay. Trade the stock near structural point, a very specific answer. My question, Kapish, is so basically, Kapish is asking, sir, what is the right perspective for understanding risk? Okay, that's the question. I'm asking you. You tell me where probability is more. Entry is what tells you if it's going to be high risk or low risk. Okay, all right. Affordable loss, okay. So low risk mean more reward? Yeah, certainly, certainly. Timing for the entry with very low percent SL. Try to buy at the idle point. Entry is necessary. Exactly. It it literally all boils down to the entry points. Now, do not use such definitions of pivot point or previous structure. No, no, no. You don't. No, there's a lot goes on, especially about the entries. It's not as simple. So yeah. Now, Ishika has said entry is what tells you if it's going to be high, low risk, and Ankit is saying affordable loss. Rehan, you have anything here?
Yes, sir. I had one perspective here. Like, for example, when we are buying at where we had 10% loss and the stock dipped more 10%. So now the stock has to get back up 10% just to bring back to you break even. So that was some other way I was looking at it.
I mean, so what? Like, so what?
So if I entered at a better price, I might lose less, but also my potential of reward also increases.
Obviously,
So if
yes.
it breaks the previous high, I will make more as compared to the other points,
Correct.
higher buying points.
Absolutely. And
So the reward also increases, the loss also reduces, and the room for the trade to work also increases.
correct. And what does this imply? Whatever you have said, what does it point to?
The entry price, best
Entry.
entry price.
Entry price, right?
Yeah.
Correct. Good. Stay with that learning. And that's exactly, I believe, what Dakshayani meant when she said low risk mean more reward. So kind of Rehan has kind of expanded on that, you know. Because let's say
Yeah.
the stock, you know, goes up till this point only, right? After this, it again starts coming back. And from this high point, this is only 10%. So if you bought here and TK, somehow you carried through this, you're gonna make only plus 10%. Somebody got made here, somebody entered here, he's gonna be plus 20%, right? So yeah. Oh, basically, all roads lead to entry point. But let me tell you this. If you go to the internet, nobody's gonna talk. In fact, they'll probably brush you off. They'll be like, entry doesn't matter. It's your risk reward. It's your position size management. Nobody's gonna tell the entry. They'll be like, even average entry will work. The point is, you people have given me the answer. I never said entry point over here. I just gave you some mathematics, some structures using technical analysis, and based on the information available, you told me that, well, you gotta look at the entry point from all perspectives, from the perspective of reward and from the perspective of risk as well. That's really crucial. It's a big, big lesson for you. In fact, there was came across a study where it said, if you bought Nifty, I think just before 2008 at the high point, and if you held till now, your wealth would have been 12x. But if you actually bought around the lows after 2009 or 10, your wealth would have been 40x. The heck? Can you? What? 12x and 40x. And the only difference is your entry point over there. That's insane. The difference is actually a lot. Yes, Kundan, you have anything?
So now I understood my mistake, what I learned in previous course and in this course. In previous course, they taught us that to take entry at every range breakout because the probability may get high of getting right. But in this case, I came to know that it's our perspective that where to take the trade or not to take the trade.
Correct. Absolutely. And I'm really happy that you got the perspective because this is so crucial in your performance. You know, that do you make 10% or do you actually make 100 or 130 or 150 or 200%? It's going to be one insane factor. Those who realize it and practice it, they'll see it in their account. Those who do not, they'll also see their own account.
Yes, sir. I'm going to delete all the lecture of last course because that was such a scrap thing I was learned about that.
Certainly. Makes me really happy to see Kundan got the perspective and he got what I'm trying to explain here. So Tushar in the chat is saying maybe dividing risk itself. Oh, doing buying on multiple values. Are you really sure, Tushar, you can do that with the knowledge? We'll see as we move ahead. Gaurav says lowest risk with highest probability point we have to find. Exactly, that's the answer, right? If you combine this with this, the job's done. So monetary, I'm going to take the lowest risk with the highest probability. That's where the performance gets unlocked. So, uh, if somebody actually has really great entries with the same set of stocks and somebody who doesn't care about entries, you'll see the performance differences just too high. Only changing the entry point. And it really pains me when I see people giving out advice like this that entry doesn't matter, it's your stock selection, it's your position size management, it's your risk reward, it's your win rate, it's your confidence, oh, don't be so fearful. What do I even say? People who say you cannot time the market, I don't think they understand what they're saying. Absolutely. It's all about entering at the right time. Absolutely. Even in investing, if you select a good company but you don't enter at the right time, you're not going to get the benefit that you probably would have gotten. And since, as I said, you are in the market, you're not here to be at the par with the index returns or so. You have to have the attitude that I want to get the best, right? Otherwise, you will see you're actually behind the markets. So, उस case में तो it was much better कि you could have just done some SIP. So I just don't get them. The closer you are to the ideal buy point, the probability of higher gains increases. Absolutely. And the amount of money that you're going to lose is, you can actually lose much less on the same capital, right? Perspective rules over everything, everything. Absolutely. You don't have the right perspective, you're going to get crossed out. You have the right perspective, you'll make more. You'll make a lot. And it happens so much in my academy. I see it happening. People who have the right perspective, they're doing amazingly well. People who don't get the perspective, they are not doing anything great. They are literally negative. Lectures are the same, live session is the same. So what's the difference? Perspective. And now, if let's say in some stock, well, you don't get the right entry point, what do we do in that case? We don't get the ideal entry point. Well, we simply leave it, let the stock go, let it go 100, 200, 300% up. And that solves the problem of FOMO or greed. Right? उसके बाद, if you have impulse problems, then it's a problem with you then, no? If you're just too impulsive, too reactionary, then it's a bigger problem we have at our hands. But I hope everyone gets it, right? It's so crucial. Yes, Rehan.
So yeah, I just wanted to share. I identified one more thing. Like in lecture one live session, you also mentioned be extremely cautious and aware of yourself. So this is where it comes.
Correct. Absolutely.
Because person A with no perspective and person B with perspective will be writing the same move, but the returns will be extremely different, and the mindset and the calmness will be extremely different. It's all because of the perspective and the vision that you have.
Certainly. Now, since you have talked about being calm, let's roll back in the chart and let me tell you one thing which Arjun mentioned. He said it will create fear first, it will show loss in screen, and then he said we'll be prompted to exit. That's going to make you fearful. So, all that he said, if you take to the internet, what are they going to say? They'll say, oh, that's a psychological problem. Read this psychological book, on the trading, on the mindset. Your mindset is bad. That's what they'll say, right? Ki go read that book. Be
Yeah.
mentally stronger. Pata nahi. I don't know what other things are in fashion right now, but probably that's what they'll say. But do
Yes,
you
sir.
tell me, is that actually a psychological problem or there's something else going on? Basically, the root cause.
Missing perspective.
Missing perspective, and is there a technical problem that he's making because of which he's feeling the way he's feeling? Can you tell me that?
Yeah, because if he's lacking perspective, there won't be context to his trade as well.
ठीक है,
So
that is
entry point might differ. He might get a better entry,
correct.
but he will exit. He won't have a proper criteria to hold the trade, to exit the trade. So he won't be knowing what he's doing.
Correct, that is one thing. Anybody else who can add that? What is the core problem that Arjun is facing when he says, with correct entry, that emotion will not be triggered? Exactly. It's an entry problem. You feel you are fearful, you feel it's a psychological problem, but actually the cause is technical cause. What, you're trying to solve a technical problem through psychology, through mindset? Are you crazy or what? Right? You don't know how to drive a car, you come to me and I say be mentally better. What's going to happen to you and your car then? See, that's exactly the problem on the internet. Yes, Kundan.
So now I can relate in 2015 when I was preparing for my government services exam. My mentor told that the psychology of every person cannot be the same.
Correct.
Now I can relate that how could one can tell that go and check your psychology, read the psychology book, which will help you to get psychological and get the great entry point. That's
Correct.
wrong.
So see, psychology and all that is great, but what comes first is your technical skill. Do you even have that skill, or are you just using lack of skill, lack of clarity, and then using psychology as a cover up for that?
Yes, sir.
That's extremely crucial in trading. So as Arjun now says, if he gets the buying right, there will be no way to entertain those emotions there, right? Once the technical part is in check. And obviously, nobody, like even if I buy at not so ideal point, I put a lot of money and it goes down a lot, it's gonna make me feel uncomfortable. Even if I see the chart ki nahi wahan tak hai, but then I think, okay, what if it now goes down even below that? And when that loss will happen, am I ready for it? I'm not. So what will happen? That will make me exit the stock prematurely, right? And that's exactly what's happening with people. By the time it actually comes to the buy area, people are scared, right? So again, we'll talk more about this, but ठीक है. Yes, Deepan.
Sir, I am starting to understand some issues that I have. I mean, for example, I understand that I may be choosing stocks with, improper DNA. So, for example, Godrej Agrovet,
Correct.
I tried trading that, twice this year, and both the times I failed. And well, it's quite clear that it keeps going sideways, right? So, I mean, shouldn't really be on that stock. So, yeah, I mean, certain realizations like that I have started to have. So that's just wanted to say that.
Absolutely. And you probably would have heard also people talking about learn from your mistakes, right?
Yeah.
You can only do that when you have some logical ground to define what exactly was the mistake, what went wrong. But when you don't even have substance around it, what are you gonna learn from it? All you learn is, well, it's a game of probability. Now, how does that help me? No, it doesn't.
Agree.
So, all of this is a cover up by the people. So, but ठीक है, they are our liquidity. That's how I see it. Great. Anybody else who wants to share anything? And one common problem that I've seen in the people who are not able to perform great is exactly this mistake. What do they do? So, like, we have defined everything logically, where to buy, how to buy. What do they do is they try justifying this point. You know what they tell me? I'm like, hey, why did you even buy this here? They tell me, I thought. I'm like, man, who asked you? No one. There's no need for this. If you have done your analysis, you have established your buy areas, you know the context, why are you thinking now? You know where the buy point is, the good buy point. They're like, yes. So I'm like, what were you even doing there? That's the biggest problem people face, I thought. And I'm like, why can't you stick to what you have been taught? Just do that and experience it. That's really huge. And this is applicable everywhere, like whatever you're trading, crypto, forex, stocks. Yes, Rehan.
Yeah, I just wanted to mention the same thing was mentioned in that F1 video that you have shared. So after the weekend and everything, the preparation, the engineers input their own thoughts. They, after doing everything, the work has been done. They just sit in the car and execute that plan. So when you have plan, execute it, not think about it.
Correct, exactly. So this is really important. Only a framework, logical reasoning framework can allow you to actually learn from mistakes, right? Okay, where you went wrong. Was the buy entry wrong? Was the context setting wrong? The selection of the stock was wrong. It has to be objectified for you to learn from the mistakes. I cannot give you a pattern or a formula and say, ठीक है, let the probabilities be, and then also give you and say कि अरे learn from your mistakes. You do not learn from mistakes. You're repeating it. You're bound to repeat the mistakes when you actually don't know where you're going wrong, right? And honestly, that's so frustrating. You keep repeating the mistakes and also don't know where you're going wrong. You cannot objectify that, okay, this is the point I'm going wrong. Extremely crucial. But once that is streamlined, like, there's nothing. Like, I was having a word with your senior. I was watching his performance and the stocks he has traded. Now we are able to, like, we both, I say, okay, do you see the problem what you did here? And he's like, yes, I absolutely know what I did wrong, what I should have done versus what I've done, and I know from where this problem has come. So it becomes so easy to communicate and explain and understand. So that's there. Great. I think we have Nile, but I think he won't be able to unmute. That's okay. Frederick is saying, I wanted to add, I asked Nitin to teach me what he said. I have to go through the process. Exactly. He's very interested in the way the academy operates. Exactly. It's designed in an interesting fashion. Like Ankit said, I do not understand what you're trying to say. What I said, well, watch this after lecture number 13th, which is gonna come after like 3 months. That's exactly by design, because that kind of prompts you to go and revisit everything. And those who do well, they are started to see great results as well. I haven't put the results that I've received so far in your group. I'll probably send you the video when the video is out. I'll give you that as well. But ठीक है. I mean, see, there are so many things which we are going to understand, and that will make you explain how horrible the trading community on the internet is. And it could be the famous guy you are thinking right now. It could be. Because what I've seen in the people probably who have been made famous or power of authority, they got there because of a lot of luck. And they talk about that as well, that it's 80% luck and all that. But ठीक है, let them say. Great. I think we had a great session. I will be sending you the next lecture today. The recording will be uploaded as well. And then we'll go on a break, maybe in a couple of weeks, for a week. We'll have a break of a week to allow you to catch up and maybe revisit, and then we proceed ahead. And always try to self reflect whatever I'm teaching with your experience. Nothing teaches better than experience, right? And try to relate with what you were doing previously. Think about it. What kind of trades were you even taking? What was the problem? And think through. Sit with it and go slow. That's the only way you will learn. Okay. We had a great session. I will